This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Saudi Arabia, the world's biggest oil exporter, on Sunday hiked August prices for Asian and European buyers by more than $1 a barrel as domestic crude demand is expected to rise, reducing exports, and consumption from China is likely to increase. State energy firm Saudi Aramco raised the official selling price for its flagship Arab Light crude to Asia loading in August to $2.20 a barrel above the Oman, Dubai average, the highest in 4 months and $1 up from July. The price hike exceeded expectations of 50 to 80 cents a barrel in a Reuters survey early last week. The Gulf Kingdom also increased the prices for all crude grades it sells to refiners in Northwest Europe and the Mediterranean by $1.40 a barrel from the previous month.
Oil prices slipped on Monday after OPEC Plus surprised markets by hiking output more than expected in August, while uncertainty over U.S. tariffs and the potential impact on global economic growth weighed on demand expectations. Brent crude futures fell 24 cents, or 0.35%, to $68.06 a barrel by 0642 GMT, while U.S. West Texas Intermediate crude was at $66.31, down 69 cents, or 1.03%. The Organization of the Petroleum Exporting Countries and their allies, a group known as OPEC Plus, agreed on Saturday to raise production by 548,000 barrels per day in August.
Moving on to the top news in the energy sector.
A U.S. Senate budget reconciliation bill leans heavily toward fossil fuels by accelerating phase-outs of the 30% solar and wind tax credit and adding domestic sourcing criteria for renewables. It extends support for nuclear, hydropower, geothermal, hydrogen, and carbon capture projects, while stripping Unspent Inflation Reduction Act, IRA, funds and limiting home, commercial energy efficiency credits. The legislation mandates expanded oil and gas lease sales in Arctic Alaska and the Gulf, lowers coal royalty rates, and scraps some strategic petroleum reserve purchases. Overall, it shifts federal energy policy toward fossil fuel production at the expense of clean energy investment.
OPEC Plus oil producers are set to approve another big output boost for September as they complete the unwinding of voluntary output cuts by 8 members and allow the United Arab Emirates to pump more to meet a larger quota, 5 sources said. Plans to unwind cuts of 2.17 million barrels per day, BPD, began in April with a boost of 138,000 barrels of oil per day. Hike of 411,000 barrels of oil per day followed for May, June and July, despite falling oil prices. On Saturday, the group approved a 548,000 barrels of oil per day jump for August. 5 sources familiar with the discussions said on Monday the group is likely to approve an increase of around 550,000 barrels of oil per day for September when it meets on August 3. Next, we have the top news in metal markets. Gold prices dropped on Monday after U.S. President Donald Trump signaled progress on multiple trade agreements and announced extended tariff reprieves for several countries, dampening demand for the safe haven metal. Spot gold fell 0.7% to $3,311.09 per ounce as of 0626 GMT. U.S. gold futures lost 0.7% to $3,320.30. The U.S. is close to finalizing several trade agreements in the coming days and will notify other countries of higher tariff rates by July 9, Trump said on Sunday, with the higher rates scheduled to take effect on August 1.
Vietnam has imposed an anti-dumping levy of up to 27.83% on some hot-rolled coil steel products originating from China after a similar temporary tariff expired, the Trade Ministry said on Monday. The tariff took effect from July 6 and will be in place for 5 years, the ministry said in a statement. In March, the ministry imposed a similar temporary anti-dumping levy that lasted for 120 days. Among the companies hit by the 27.83% duties are Baoshan Iron and Steel and Manshan Iron and Steel. Guangxi Luzhou Iron and Steel Group will also face duties of 23.1%, higher than the 19.38% rate imposed in March, according to the statement.
We will now look at the top news in the agricultural sector.
Chicago wheat futures slid more than 3% to a one-week low on Monday, as ample supplies from the ongoing Northern Hemisphere harvest dragged down the market. Corn and soybeans fell about 1.3% on expectations of bumper U.S. production as trading resumed after the U.S. Independence Day holiday on Friday. There is general harvest pressure in the wheat market, said Ol Hue, head of advisory services at Icon Commodities in Sydney. U.S. futures in particular for wheat had rallied to a level where U.S. was uncompetitive. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.